So good morning, everyone. So I'm going to speak very quickly, and I'm going to talk about the digital world and how it's impacting everywhere. And this first video that you watch, you must relate it to every asset class of the stock market. You must relate it if you're a technology analyst, if you are following consumer products, you're following junior gold mining. It doesn't really matter. The fact is that 60% of the internet today are bots looking for information. And that's so often when you try to send an email, they ask that you're not a robot. And it's just recognizing how the data switch is taking place and how fast it happens with the world of gold.
We noticed something interesting about Twitter lately, particularly when this guy gets hold of it. Anytime a company mentions moving to Mexico or overseas or just doing something bad, he's on it. He tweets, the stock tanks. Tweet, tank. Tweet, tank. Tweet, tank. Everyone's talking about how to make sense of all this. T3 thought the unpredictability of it created a real opportunity. Meet the Trump and Dump automated trading platform. Trump and Dump is a bot powered by a complex algorithm that helps us short stocks ahead of the market. Here's how. Every time he tweets, the bot analyzes the tweet to see if a publicly traded company is mentioned. Then, the algorithm runs an instant sentiment analysis of the tweet in less than 20 milliseconds. It figures positive or negative. A negative tweet triggers the bot to short the stock. Like earlier this month, his Toyota tweet immediately tanked the stock, but the Trump and Dump bot was out ahead of the market. It shorted the second after his tweet. As the stock tanked, we closed our short and we made a profit. Huge profit. Oh, and we donated our profits here. So now, when President Trump tweets, we save a puppy. It's the Trump and Dump automated trading platform. Twitter monitoring, sentiment analysis, complex algorithms, real-time stock trades. All fully automated, all in milliseconds.
So interesting enough, the gold has surged 11.5% this year. And what's also most interesting is that gold, since this millennial, that it's basically outperformed the S&P 2 to 1. But you wouldn't think so that when I go on to speak on CNBC, because all they want to do is talk negative about gold. It's had a big influence that 80% of the talking heads are bullish on Bitcoin, 20% are bearish. However, now we're getting a surge in the increase of looking for how to buy Bitcoin, not to buy gold. But my whole thesis on this whole crowdfunding phenomena is that it's not hurting the world of gold, as some people like to think and have this sort of conspiracy towards it. It's really hurting the formation of capital for all junior mining, for all investing, because the new millennials are bigger than the baby boomers. And the new millennials do not have the time or the interest to wait 2 days, 3 days to open up a brokerage account. They can open an account, and I believe that Einstein is here, in 5 minutes and open up and all of a sudden own Bitcoins. This phenomena of a Trump bot is also influencing how formation of capital is taking place and how the differences are taking place. So to me, it's most interesting that they continually like to bash gold, even though it continues to be a wonderful asset class. Another classic part is this creep up in regulatory. This is a classic that I've had for over 20 years, Elvis Presley in his gold suit. And this past summer, the regulators have came in and said we have to make a disclaimer that Elvis Presley is a public figure. In no way he's related to U.S. global funds. And that would almost infer that the National Enquirer says that Elvis is still alive. We had to go back over 20 years and add this disclaimer. The crowdfunding world doesn't have this. You're able to turn around and have 10 slides and make a presentation, raise $10 million, and at the back of the room, the legal documents get done and the paperwork, versus speculating on a $500,000 prospectus, and then maybe you'll be able to raise money. It's inverted itself, and that's all part of what's taking place because of the digital world. Now, this is another important factor when looking at macroeconomics, government policy. It's binary, like the internet is zeros and ones. So you can see it's monetary and fiscal policy. Monetary policy, you can see is interest rates, are they real, positive, or negative, and money supply growth versus fiscal, tax, and spend and regulations. This has all been automated. The data feeds that you can pay, it costs you an extra $30,000 a month to get the data from Bloomberg if you want to get access to government data 1 second ahead of everyone else. Now, this is the inverse relationship that's so profound for the fear trade. It's simple. Real interest rates right now are still negative for the 5-year government bond. So therefore, gold starts this spurt of a rally. CPI numbers turn around and turn positive. They get a reset buttons. CPI resets every month. And it's quickly calibrated against 2-year, 5-year, and 10-year government bonds. When gold hit $1,900, we had minus 300 basis points for 10-year government bonds. That's why. And then it went quietly. It went to plus 200 basis points. But because it was all zero short-term interest rates, no one saw what was taking place in the capital markets, except for everyone in this room felt the pain of gold and gold stocks falling. So now another part of seasonality when it comes to gold is the annual part of the love trade, and it has a lot to do with religion and holiday giving. And the other fact that you have 600 million people, which is twice the population of America, that is embracing this digital world. And the other, to me, is the fascinating is that there's more gold in the private homes in India than there is, 6 times the number in Fort Knox. And Indians have always protected themselves by owning gold and passing it on. They wear their gold jewelry. This is another factor to show you that Indian households own more than the top 6 central banks in the world. And the other important significant factor that's driving this love trade is the rise of GDP per capita. So when you have a cultural affinity of giving gold and you have rising GDP per capita, then you get more consumption of gold for gift giving. And it's also had a big impact on real estate prices. The Chinese now have surpassed America in the middle class, but it gets lost in a sea of 1.4 billion people. But there are more middle class. And when America turned around and gave a 10-year tourist visa for Chinese, all of a sudden we started seeing real estate prices explode in America, especially along the West Coast and in New York City. And this is another significant factor when you look at China and India, affectionately known as Chindia. It's 40% of the world's population. And with rising GDP per capita, there's just a natural proclivity to buy gold for gift giving. And then we have the most amazing part is to have this number, 2 billion people to 7 billion people that are connected without passports. And the internet gives us big data. And this big data is the most advanced by Facebook. Now, one of the other things we look at, and we know that has a significant impact on the Chicago Mercantile Exchange, that whenever a PMI that comes out every month, like CPI numbers, when the 1 month is above or below the 3 months, it immediately has an impact on copper prices, it has an impact on gold prices, it has an impact on bond prices, and like I showed you in the video with the Trump bot, it's 20 milliseconds. 20 milliseconds, all of a sudden, trades are being put on the futures market. It's for all of you to recognize this, to say, okay, what's happening in the capital markets, because there's so much biases in the media, and that can turn around and confuse you in making an informed investment decision. And they understand that the volatility of gold, it doesn't fall for 3 years in a row. And we're looking back, and then this is the most important factor for everyone here, to recognize the DNA volatility of every asset class. And now cryptocurrencies are becoming an asset class, and their DNA of volatility is much greater. And most often when I go on CNBCs or the Bloombergs, et cetera, they think that gold is more volatile than the S&P 500, but in fact, they're the same. And it's being able to say that, stay objective, and remove yourself from the emotions of gold. So now how are the quants are driving the gold stocks? This led me to launch a GoAU, which is a smart beta gold equity ETF. And I spent about 8,000 hours doing it. It's launched in New York, and then I launched one in Canada last month, and it's called GoGo. And it's outperformed the GDXJ going back over 10 years on a rolling 12-month basis, 94% of the time. In fact, over that time period, the GDXJ has lost 40% of its money. As you started with $100,000, it's worth $60,000, whereas the smart beta is plus $200,000. It's trying to understand why is that taking place? Why does smart beta work better? The biggest reason is the GDXJ constituents have been issuing shares faster than they've been growing reserves or production or the price of gold. So in fact, the GDXJ constituents have been issuing shares at a rate of 25% a year. So either the price of gold goes up 25% a year, or their reserves production goes up 25% a year. But that's not happening. It's just not happening. So it's to recognize the only way to get your arms around that is quantitative math. So how do you do this? What's this whole thing of artificial intelligence and machine learning? So most of us are related to deductive thinking, and then we have Dr. House here, inductive thinking. And machine learning is all about inductive thinking, of creating a heuristic, a probability that something will happen. Like GPS can't tell exactly where you are with your iPhone, but it can put you in this room. And it needs more satellites to be able to get closer where you are in approximation, but it does a probability. Just like Alexis, when you ask something, it has a probability. And things start to have great adoption when they're 90% probability of being accurate. So this recognition of the gold to currency to stocks, and then quickly you can turn around and see this machine learning. It's not about Excel sheets. It's much more about this probability of an event happening or probability of you being there. And so the quant hedge funds are using this data mining. It's getting cheaper and cheaper. And the other one is this app. This is an app you can all get on your phone to see if I'm lying. It's about 30% accurate. And think if you're negotiating to go buy, you get a contractor in your house and you're trying to find out if exactly they're telling you the truth. It's about 30% accurate. But what happens if you have an impaired balance sheet and they're listening to a conference call? And if you have an impaired balance sheet, too much debt, and you have difficulties, and they listen to this and it sounds like you're lying, immediately they will short your stock. They listen, and this thing called NLP, natural language processing, it is the backbone of Google, and it comes from Stanford University. And basically, you've got to think of the quant fund, put it on steroids, and the ability to read data. And they can read and process 250 pages of Fed minutes in 1 minute. And they immediately look at patterns of words, where they're 2s and 3s and 4s and 5s, and what words were in the previous 5 presentations made by the Fed minutes white paper, and what are the differences, etc. And it happened 2 years ago that the stock market rallied after the white papers came out. 250 pages. 1 minute later, the market is going up, and Janet Yellen comes out an hour later and says, oh, 2 words were not supposed to be in those Fed minutes, and the market sold down. That's machine learning. That's how data is being used, and that's better than listening to talking heads that tell you what's happening in the capital markets. It's all about the data. And that's why Donald Trump won the election. It was all about data mining. And they told you it was a bunch of redneck white people from No, it's not true, because they're not that big of a population. It's all the biggest company in the world for Renaissance, most successful data mining is Renaissance Technology. And they're founded by Jim Simons, who's a cryptologist. And in that capacity, their new CEO, Mercer, was the one that funded the use of Cambridge Consulting to help Trump win the election. It's about data mining. And that's the reality. And a lot of the media would say, I don't know why he's going here or going there, etc. But it's the use of data mining. And one of the big pushbacks was excessive regulations. And I wrote, and I've discussed it with many CEOs. And I think what happens is that many CEOs that call blue dogs in Texas, they're blue dog Democrats. They're Democrats that actually voted for Trump because they became so exhausted from trying to grow their business, but they couldn't because of regulatory red tape everywhere. And so they turn around and they send in a bully to fight bullies. And then I was at a conference, a hedge fund conference, where Bernanke said that he looked upon Trump as being like Jimmy Carter, both opposites of the political spectrum. How could you do that? Well, because both of them want to take on the Beltway Party. And anytime some president wants to take on the Beltway Party, he will get a rebellion that comes both in the media and comes from the inner circle. So it's now, how do you recognize that? And what I found is that the data miners are able to get government data and not listen to all the negative news, and actually the stock market's rallying. because there are changes taking place. It's hard to believe it, but there are changes taking place in the Beltway that are allowing things and getting rid of some of this red tape, and that's a big change. The person who's head of the SEC today says that it's just un-American that IPOs have fallen 75% and the formation of capital has been broken, and that we have to make change to try to form capital again. So these are some of the parts that are not being the narrative, because Trump is basically a lightning rod for negativity. So now what's a smart beta? What is smart beta? Well, it all came in from FAMA at the University of Chicago, of looking at data, and are there precursors, are there factors out there that give you a probability of being better? And if you look at momentum, you look at quality, look at size and value and volatility, if you focus on those and use data, you can outperform the emotions of capital markets. It's another way of looking at those smart beta factors. So at US Global, we used to always look at production, cash flow, and reserves. And we used to look at relative value, momentum, and events. Events would have significant factors. This has all been automated. Taking this data and downloading it has become much more significant for the quant funds. So one of the things I noticed that in the project risk rises as discount rates. So a lot of times these financing was done at zero interest rates. If you look at most of the write-downs that took place in mining companies, it's basically because they didn't have 10% or more discount rates. That's a simple dollar value. And it's just recognizing that. Now, here's something that's really phenomenal, is a piece of research put out years ago by CIBC, that if you make an announcement that you have a feasibility issue or an operating issue, your stock will take about 2 weeks to fall 27%. Eldorado fell in 2 hours, 27%. Why did it not wait 2 weeks? You talk to any gold fund manager, they weren't dumping Eldorado. They didn't have a chance to process, take down the data, put it into their model. It's a very slow process. It was immediately done by quants by reading the words I started off earlier called NLP. It's how fast they're moving. And so this is what explains some of this volatility. And for yourselves, you can understand, if you have those headlines as outlined there, your stock will fall that amount, and they know it. And as soon as they read it in the narrative, they immediately start dumping the stock. And the other big part that's really hurt the gold stocks this year is the GDX and GDXJ, in particular the GDXJ. The success of ETFs is all of a sudden what happens when it goes to the S&P 500. That if everyone's being pushed to just buy cheaper to get something free, and it's all indexing, and it's the only way, and they have a law, the fiduciary law says you just have cheapest is best, then all of a sudden everyone crowds in to be an index. And that's what's happened. The GDXJ is one of those parts, is that last year it captured 95% of all fund flows. That was $5 billion. In a matter of a couple of weeks, they had to blow out $3 billion, because all of a sudden, this concentration of money going into one unit was all of a sudden owning 20% of 20 companies, and therefore they had to do takeovers. They couldn't have that legal issue, so they blew all the paper out. And if you get hit by a car, or you get punched by Mike Tyson, you don't heal right away. And that has been a big phenomenon that's hit the capital markets in the months of June, July, August, September, and even to today. So many royalty companies is another superior business model that's outperformed. And this is as a classic example, it's a superior business model. It has less risk. And royalty companies' dividend rates have been growing faster than the S&P 500 and much faster than gold stocks. And royalty companies have a greater revenue per employee. This is one of my favorite examples, and I've done this for all 10 sectors of the S&P 500. You just give me the company with the highest revenue per employee, and that stock is outperforming the industry. And that's outperforming the overall basket of those stocks. So when we look at Franco-Nevada has the royalties in Nevada on both Barrick and Newmont's assets. Newmont's average revenue per employee is $300,000, and Barrick is $400,000, but Franco-Nevada is $17 million. So then we take a look at debt levels. The debt levels of royalty companies are substantially less, and just the same thing would look at the success of Silver Wheaton, its ability to go and borrow $1 billion at less than 5% to deploy capital. It's just remarkable. And they have the highest revenue per employee in the world, and they're the sponsors of this event. So this idea, how many here saw the movie Moneyball? Right? Just a handful. How many read the book? It'll even get smaller. Well, the book really gets into the detail, and the fact that this concept of Moneyball is in all sports now. They all have young quant analysts that are looking at the data of athletes and staying away from the emotions of the athletes, but looking at their statistical ability to score from any part of the ice rink or the basketball court or the football field. Well, that's what's happening in stocks, and we launched GoGo in Canada, and we have GoAU in the US. Now, this this analysis, I've been so caught up in this digital world and how it's impacting, and I was really caught up with my nephew telling me, Uncle Frank, you've got to get involved in this cryptocurrency world. And I'm going, yeah. And my son pushing me. So I went off to a conference in New York called Consensus, and I was actually shocked when I found the CEO of Fidelity was the keynote speaker, which has $2 trillion in assets. It's the second largest discount brokerage firm in the world, the biggest. I mean, like, this is a phenomenal company that's all privately owned, and she has a rig in her office, and she's mining coins, and she has all of her employees with a wallet with Bitcoin. I mean, you got to think, what's happening here? There's something that's not mainstream. So I started becoming more interested in the space and the energy in the room. It was so different going to a gold conference at the New York Marquis Hotel, the Marriott, and that's where all the gold conferences have been held. And all of a sudden you go to a digital conference and it's 3 times the people, and there's hardly anyone drinking at the bar. They're all drinking Pepsi and coffee. And they're all 3 times the number of people cutting deals. It's a new world.
When you vote, have you ever wondered whether your ballot is actually counted? If you meet someone online, how do you know they're who they say they are? When you buy coffee that's labeled fair trade, what makes you so certain of its origin? To be sure, really sure, about any of those questions, you'd need a system where records could be stored, facts could be verified by anyone, and security is guaranteed. That way, no one could cheat the system by editing records, because everyone using the system would be watching. Systems like this are on the horizon, and the software that powers them is called a blockchain. Blockchains store information across a network of personal computers, making them not just decentralized, but distributed. This means no central company or person owns the system, yet everyone can use it and help run it. This is important because it means it's difficult for any one person to take down the network or corrupt it. The people who run the system use their computer to hold bundles of records submitted by others, known as blocks, in a chronological chain. The blockchain uses a form of math called cryptography to ensure that records can't be counterfeited or changed by anyone else. You've probably heard of the blockchain's first killer app, a form of digital cash called Bitcoin that you can send to anyone, even a complete stranger. Bitcoin is different from credit cards, PayPal, or other ways to send money because there isn't a bank or financial middleman involved. Instead, people from all over the world help move the digital money by validating others' Bitcoin transactions with their personal computers, earning a small fee in the process. Bitcoin uses the blockchain by tracking records of ownership over this digital cash, so only one person can be the owner at a time and the cash can't be spent twice, like counterfeit money in the physical world can. But Bitcoin is just the beginning for blockchains. In the future, blockchains that manage and verify online data could enable us to launch companies that are entirely run by algorithms, making self-driving cars safer, help us protect our online identities, and even track the billions of devices on the Internet of Things. These innovations will change our lives forever, and it's all just beginning.
So you hear the negative news all the time, especially with Jimmy Dimon, but he has 50 people that are doing blockchain analysis because of the capacity of being able to move data, 24/7 trading. And you see that the financial institutions have filed 2,700 patents on blockchain technology. It's real and it's big. And you think of what really was the early app that got everyone interested in the internet was sending emails. And then it grew from there rapidly. I think it was AOL was one of the first to give you a free email address and you could turn around and send information. And I think that Bitcoin's doing that for blockchain. So you get an idea of here that buy Bitcoin overtakes buy gold as online search phrase. A lot of that has to do with all the talking heads around the world. What is Bitcoin? Something like 54% of the world have heard the word, but they don't know what it is. But the ability to transmit money from poor Filipinos working in North America, sending it back to the Philippines, or people from El Salvador, Guatemala, etc., the cost of them sending money is so expensive. And here they'll be able to send money at $2.50 per $100, not $20 or $17, and they'll be able to do it 24/7 to try to help their families. This is part of the whole remittance program that the technology of blockchain is going to be a game changer. And stock trading is going to go 24/7. And there's never going to be counterfeit. You don't have counterfeit money when you have digital currency.
What is Bitcoin? Bitcoin is the first decentralized digital currency. Bitcoins are digital coins you can send through the internet. Compared to other alternatives, Bitcoins have a number of advantages. Bitcoins are transferred directly from person to person via the net. without going through a bank or clearinghouse. This means that the fees are much lower. You can use them in every country. Your account cannot be frozen, and there are no prerequisites or arbitrary limits. Let's look at how it works. Several currency exchanges exist where you can buy and sell bitcoins for dollars, euros, and more. Your bitcoins are kept in your digital wallet on your computer or mobile device. Sending bitcoins is as simple as sending an email, and you can purchase anything with Bitcoin. The Bitcoin network is secured by individuals called miners. Miners are rewarded newly generated bitcoins for verifying transactions. After transactions are verified, they are recorded in a transparent public ledger. Bitcoin opens up a whole new platform for innovation. The software is completely open source and anyone can review the code. Bitcoin is changing finance the same way the web changed publishing. When everyone has access to a global market, great ideas flourish. Bitcoins are a great way for businesses to minimize transaction fees. It doesn't cost anything to start accepting them, and it's easy to set up. There are no chargebacks, and you'll get additional business from the Bitcoin economy.
And then we hear this thing, it's overvalued, it's had a big run. But what's interesting, that's a famous engineer that wrote this, what's called Metcalfe's Law. And Metcalfe's Law says, and this research he did came out with, I think originally it was with cable, and then it was adopted to the growth in mobile phones, and now it's basically explaining Bitcoin. More people that use Bitcoin, the value of Bitcoin goes up geometrically or exponentially. So the only way when you look at a cryptocurrency, you can't put it on a linear chart, you have to put it on a log chart. Ian McAvity used to always put long-term trends, etc., on log charts to try to better understand the overvaluations versus undervaluation. So what it says to you is that this Bitcoin has got much further to go because of factors that are taking place. It's like this. This is a recent announcement that one of the biggest Bitcoin exchanges just added 100,000 users in a day. So that is what drives that valuation. And the Wall Street Journal commented on Abigail Johnson and what she's doing in the Bitcoin space. And then we take a look at who accepts Bitcoin. And this is really the thing that shocked me. Starbucks, Microsoft, Square, Tesla, you can buy a Tesla car with Bitcoins, Dell computer, you can turn around and use, you can see here, gift, and immediately then it's usable into Amazon or Gap stores, Shopify, Bloomberg. It goes on. Most people are not aware that this is being used, and every employee has a wallet at Fidelity, and they can go to their own cafeteria and use it to buy food. And that's their competitive advantage, is embracing this technology. So Coinbase is here, and I got to meet, which I thought was fascinating when I was launching my gold equity ETF. The New York Stock Exchange invested in Coinbase in 2015, and same thing with USAA, the largest military insurance company in the world, which is just up the street from me in San Antonio, and they invested. The consultant for USAA's investment comes from Vancouver. And so I got to meet her, and she spent 3 weeks in Vancouver going through it. But to give you a summary, in 2015, the valuation on Coinbase was $75 million. Today, it's $1.7 billion. 100,000 people a day coming in to use it. So it's so easy. It takes you 5 minutes, and you can open an account and all of a sudden get up to $10,000 in Ethereum or Bitcoin. It's incredible. It takes you 2 days to open up a brokerage account, and if it's a corporation and trust, it can take you months. Now I got into the mining business.
Are the Swiss Army knife of the blockchain technology. We can mine any coin that's happening on the blockchain market and any coin that's coming up in the future. So in order to participate, you need GPUs. And we're doing this massive build-up of GPUs for the altcoin market. My name is Stefan Schindler. I'm the CTO representing Genesis Mining, and we're here once more in Iceland, expanding our mining operation. When the network started, everything was about doing this type of calculation on your processor of your computer. But soon enough somebody found out actually graphic cards are better in doing these kinds of operations. They're more efficient, which means they can do more transactions or more calculations with less power. And that's the reason why we are building out so many GPUs. GPUs means graphics cards. A mining rig is basically a computer, but it's stripped down to the minimum in terms of computing and up to the maximum in terms of mining.
So I get to this opportunity, and Frank Schuster called me about this. Young guys have got this relationship with Genesis Mining, and I'd been doing all this research because I was trying to launch a product, but all I could do was get, no, you can't do it because you have AML issues. Anyone want to put money in, no mutual fund can make a direct investment in Bitcoin because of the concern of where those coins came from. And so in this part of this process, I've been doing this research, and I told Frank, he said, yes, I'm very interested. And I became the largest institutional investor when they were creating this corporation, this partnership. But I went to meet this young guy, Genesis Mining. It's remarkable. He finished university math at the age of 16 years old. His partner has a PhD in theoretical physics. Out in 4 years, without any capital funding, they are doing $1.5 billion in revenue. They're getting 50,000 new subscribers. You can use their data mining, their cloud, and their software. They're the biggest steady buyers of NVIDIA cards. It's remarkable what this company is, all run from a smartphone. Last week, I was in Hong Kong with Marco Strang. So Bitcoin is all of a sudden showing up in Hive, and what is making the interest of Hive? Hive is the only public company today that you can buy to participate on the infrastructure of this space. And we are mining what I like to call virgin coins. We do not traffic in the capital markets or the crypto world of buying coins over somewhere else. We create them. And you need cheap electricity, so we're in Nordic countries. And 30% of the partnership is with Genesis Mining, who is the largest company in the world in this space.
The global financial system faces mounting risk, reliance on intermediaries, and grinding friction. New technology has emerged to resolve some of the tensions in this legacy system. Blockchain protocols like Bitcoin, Ethereum, and other cryptocurrencies offer a secure way to transact without the need for middlemen. Those who understand the potential of these technologies are creating new business platforms and winning first-mover advantages. Until now, the complexity of cryptocurrencies has deterred traditional investors from gaining exposure to blockchain's potential. Hive, one of the first crypto companies to list on a major stock exchange, offers direct exposure to the crypto economy and its huge growth opportunities. Like precious metals, cryptocurrencies are also mined, requiring high-performance computing and massive amounts of energy. Miners provide the computational power necessary to verify the complex encryption and safety methods that blockchain networks require in exchange for rewards paid in cryptocurrency. Hive will provide this at industrial scales. By combining the ingenuity of Genesis Mining, one of the world's most successful crypto mining companies, with the capital markets expertise of Fiore Group, a prominent merchant bank behind some of the largest metal mining companies, Hive's goal is to build a global leader in crypto mining and establish a solid platform to launch other related businesses. Hive provides shareholders exposure to both cash flow from an operating crypto mining business, as well as a growing portfolio of cryptocurrencies generated from mining activities. Hive is uniquely positioned to accelerate the development of this explosive sector and to create long-lasting shareholder value. Hive Blockchain, listed as Hive on the TSXV.
Well, thank you very much, everyone. 3 minutes over my timeline, but I hope I haven't overwhelmed you, but stimulated you to recognize the digital world and how it's showing up everywhere. And how the more regulatory that the world wants to become, the greater the dark pools of capital start to create, such as crowdfunding. That $50 billion last year were put together by crowdfunding. And that's all part of that whole crypto world. And it's going and it's growing, and the best part is just to embrace it and understand how it affects media, how it affects stock prices from the beginning of the Trump bot right down to Hive. Last thing I'll share with Hive, based on the Ethereum prices today and based on what's called the hash rate operating costs, if everything works out as the model says in the back of the envelope, by March, we've gone from $1 million a month to $1 million a week. And we'll do $50 million in revenue and make free cash flow of almost $25 million. That's remarkable when you take a look at what's taking place in this build out around the world. I hope you enjoy this conference immensely and recognize that it all comes together. It's not in silos, from basic mining to crypto mining. Thank you very much.